Shares of Robinhood are on the move, down by 9.5% after the company reported a decline in monthly active users and said that trading activity continues to slump. Robinhood did post its first profitable quarter, which CEO Vlad Tenev called a significant milestone. Yahoo Finance's Jared Blikre has the details on this one. And Jared, this is interesting, not just for the company itself, but also, as Miles and I were just talking about, kind of what it tells us about the trading environment writ large.
Yeah, I think that's going to be important. I'll take a look at the meme stocks at the end of this, but I want to get straight to the numbers. So Robinhood stock trading down in the pre-market by the most since May, and this is probably going to have to force that calculation a little bit farther back in time. And this has to do with investors looking past the brokerage firm's first profitable quarter, as you said, Julie, to the disappointment in monthly active users, which at 10.8 million was lighter than the 11.7 million expected. But total assets, that was a beat at 89 billion, as was average revenue per user at $84. Now, those are the quarterly figures, and here we have the annual numbers. We can put those up going back to 2019, with 2023 and 2024 showing estimates. You can see that the next year total assets in blue are expected to print a new high after the disappointment last year. There we go. Monthly active users are not expected to recover as quickly. Now, Robinhood's revenue of 486 million for the quarter was a beat, though crypto revenue came in line at about 31 million. Net interest revenue beat expectations, printing $234 million. And if we look at the annual numbers, estimates in this chart, we can notice a few important trends. First of all, interest income is expected to grow to more than 50% of 2024 revenue, $1 billion, which essentially assumes interest rates are staying higher for longer. That's in line with what we think about the Fed. Second, options revenue is holding steady at over $500 million. This then appears to be a structural shift in the market towards more options activity that is expected to continue in the years ahead. And here's what the charts are saying. If I could get control back here, I'm going to show us some heat maps. Here's Robinhood. Let me just chart what's going on this year. You can see, along with a lot of other stocks, we had this great run up in January, disappointment into February and March. That's when we had the internet bank panic. And then we just kind of took off in June and July, but we're off sharply from those levels. And that's because of this 8.5% loss we're looking at here. First, I want to take a look at our brokerage heat map. And this is year to date. Let me just sort by performance. We can see Robinhood is actually number one, Interactive Brokers up number two. That's at 25%. Charles Schwab down 21%. But a lot of these names have roared back to life over the last 2 months. That's when we've seen the S&P, not 500, but 493, really catch up. And so we're seeing a lot of this covered in here as well. Now, another thing that's happened since we saw the S&P 500 really including most of its members in the rally is meme stocks. So here's over the last 2 months, our leaders board, meme stocks up 28%. And if I actually put this on our memes board, we can see this vast array of stocks that, including Robinhood itself, there's some debate over whether or not that's a meme stock, but a lot of these stocks, including Coinbase, and that's really an exchange, not a brokerage firm so much, that's up 40%. We got Carvana up 222%. These guys are usually late to the game. It doesn't mean necessarily that the market has to roll over when we see these guys piling on, but sometimes towards the very end, and last year this was a contrary signal. When these guys were perking up in a big way, you might want to watch out, because if you're late to the game, well, that means the market might be rolling over just by the time you start buying. So I think that's a little bit of what we're seeing right now. But the big question is, how much do we roll over in the major indices? And then how much do meme stocks get crushed here? This has been a surprising bull market for me personally, because we started out at the lows last year in October with a very concentrated rally. And now that it's expanded to include a lot of things, you got to wonder, is this the new norm, or are we going to go back into sector rotation? Remains to be seen, Julie.
It does. Really interesting stuff. All the stuff about options activity, also interesting. And I should note, Coinbase reports after the close today. So that is the next catalyst, one way or the other.
You bet. And we didn't even get into crypto.
Oh, there's always time. There's always time. Thanks so much, Jared. Appreciate it.